The Mortgage Minute today being brought to you by our friends at Geneva Financial when you're ready for that next home loan. Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990, and every day at this time, OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. Let's take a look. What did the loans lock at on Friday? Obviously, as I've told you before, OBMMI, they provide us interest rates only. We do not know what the APR is, how many points were paid or received. 30-year conforming loan, 6.297. That was down a little bit. The 30-year jumbo loan, 6.612, down a little bit. 30-year FHA loan, 6.186. That was down a little bit. 30-year USDA loan, that was out. That's for those out in the rural areas, generally no down payment. That was up just a fraction. And the best loan on the market for those that earned it. You cannot just apply. You need to have a golden ticket for this one. This would be the 30-year VA loan. That was down pretty nice. That was 5.778. Love that when our VA loans go down. And then again, down below 6, 5.778 on the VA loan as of Friday. As I've mentioned before, just to throw this in there, we are in the process of doing a whole series for our veterans because for some reason, the VA doesn't do a very good job, and the Department of Defense doesn't do a very good job of alerting our veterans as to what their benefit is in housing. The VA loan, we're doing this whole series on it. It's going to be like a 50-week process on some of the VA benefits, including the VA home loan. So if you want to get in on that, RJ at RonSiegelRadio.com, RJ at RonSiegelRadio.com. Let's take a look further. 10-year Treasury up 12 basis points right now at 3.50 flat. The S&P 500 is up 2.59. Mortgage-backed securities are down 36 basis points. Ow! That means interest rates are up today. There is a disconnect between the 10-year Treasury and the mortgage-backed securities. Surprise, surprise, surprise.
Surprise, surprise, surprise.
So let's take a look and see why these things are happening. What's going on? Well, once again, we are dealing with idiots.
Such an idiot. Such an idiot. Such an idiot.
So I'm not sure which is worse, Jerome Powell or Janet Yellen. But this goes back to 1996. And Alan Greenspan, much brighter than either of these two individuals, they were worrying about inflation at the time, back in 1996. And during one of their Federal Open Market Committee meetings, Mr. Greenspan said the Fed's goal was price stability. We're wondering, where did we come up with this arbitrary number of 2% inflation? Well, it came back to price stability is what Mr. Greenspan was urging at the time. And in that crucial 1996 meeting, a distinguished economist and Fed official, would you like to know who that Fed official was? Janet Yellen. Now the Treasury Secretary, and before that, a Fed chair herself. She pressed Mr. Greenspan to put a number on his estimate of price stability. And his comment was 0. That was the proper target if inflation was correctly measured. But it's difficult to measure inflation accurately, as everyone in the room acknowledged. So Ms. Yellen said, improperly measured. I believe that heading toward 2% inflation would be a good idea, and that we should do so in a slow fashion, looking at what happens along the way. Really looking at what happens along the way. Other Fed members agreed, and the 2% target became enshrined in Fed policy, then only in a clandestine way. Mr. Greenspan did not want his hands tied, and he said, I quote, I will tell you that if the 2% inflation figure gets out of this room, it's going to create more problems for us than I think any of you might anticipate, unquote. Does that surprise anybody that was the commentary in 1996? Look where we are today. So that inflation number is the problem, and we'll see what happens. And as I mentioned earlier, now we got the First Citizens Bank bought the assets of Silicon Valley Bank. For those of you that remember, does anybody remember Wells Fargo, Wachovia, and World Savings? Yeah, I think we saw some of these things happening back then also. They bought the assets for roughly an 18% discount. Okay, that's private industry. But guess what? How much does the Fed hold of these same instruments that were just discounted by 18%? And what impact is that going to have going forward? That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.